What's up, guys? Raymond here with another stock market analysis. And today we're going to be doing the same thing that we do Mondays to Fridays, which is analyzing stocks that have decreased in value as well as stocks that have increased in value. And hopefully, we can find some stocks that are worth investing in. If you're new to my videos, what we do with the stock market analysis is, like I just said, we look for stocks that have decreased in value. And we look for stocks that have increased in value, and we analyze the financial statements and try to find stocks that are worth investing in considering the reduced price. So without further ado, let's get into it. So we're gonna go to the homepage, and we should see a column that says top winners and a column that says top losers. So let's quickly go through the top winners because we're not likely to find anything from here. So we have four stocks, and one of the criteria that has to be met is the stock has to have a market cap of 1 billion or more. And so we found 1.2 billion. PE ratio is 50.49, which is quite high considering that we're in a borderline recession. If you want, I think some people already classified it as recession, but dividend yield 1.7%, which is very low. The income statement shows that the company is actually decreasing its profit margin over the past 3 financial years, which is not good. But the last financial year showed that the profit margin wasn't too bad, but it was, in my opinion, it's too low. So far, not a good start. The balance sheet is probably a good thing. Probably shows some positive things. The debt to asset ratio is less than 50% over the past 3 years, which is really good. Cash flow statement should suggest that the net change in cash is, sorry, 1 second. The net change in cash for the 2021 financial year is 4.4 million and negative 21 million in 2020 and negative 28 million. So if you guys are probably wondering whether this is good or bad, it's not, it's neither or. So sorry, neither nor. So the reason why I go through the net change in cash is because that's the bottom line, but we need to do a bit more digging to realize why there's a negative balance. So if we realize why there's a negative balance, we can figure out whether it's good or bad to have a negative balance or a positive balance. So let's just go through it. So net income is the starting line, 84 million. So we started off with 84 million here, and then the cash from operating activities was 53 million, which is breaking it down where the cash came from. Or so I'm trying to think where the cash from operating activities, cash from investing activities, cash from financing activities, net change in cash, financing cash flow items. All right, so that basically the cash flow statement goes through the capital expenditure. All right, so 54 million of the net income. So the net income is the income statement shows the net income, the profit margin, and the net income is essentially, the net income can be divided in two different ways. It can be given out as dividends or partially given out as dividends to shareholders, or it can be spent on capital expenditure. And that is what you're seeing in the cash flow statement. So the top line is the net income starting line, and the cash flow operating activity shows how the company spends their net income. So depreciation of assets 2.7 million, amortization, which is writing off debt, 27 million. So a lot of the net income had gone to writing off debt. Non-cash items 16 million, cash paid in taxes. So taxes was paid 38 million, cash interest paid 1.2 million, changes in working capital negative 44, cash from investing activities, capital expenditures, other investment activities, cash from financing activities. So they paid a huge dividend, 35 million, financing cash flows, issuance of stock. So they bought back some stock, not much, but foreign exchange. So yeah, they've gone into debt a bit more, 28 million, which is, there's good and bad, but they clearly spent their net income on different things, giving out dividends, etc. So I would say this company is an okay company. It's not too bad. 22 cents. Sorry, 22 pence in earnings per share, which is, I would say they need to work on the earnings. They didn't earn enough money, considering the size of the company. But anyway, let's go into the stocks. Oh, we just done that. Oh, we're supposed to look at Filtron. Oh, sorry, Filtronic was too small. So Kinovo, 5.28. Never 855. So nothing so far in the top winners. Let's talk about the top losers. Rapid Nutrition. So as I said earlier, we're looking for a market cap of 1 billion or more. Wisdom Tree. I actually invested in Wisdom Tree ×2 long position, and it went up quite a bit, which is quite good, I guess. Forward Partners Group. Nope. And Jade Energy. So nothing so far. Nothing in the top losers either. I guess, well, we can't always expect to find something, but when we do, we do. We found a few in the past few videos. Not many, but they're kind of like gems. But when we do find some, we will find some, and those will be the opportunities that we look for. But without further ado, I'm going to close this video, and I thank you guys for watching. Any comments, comment in the comment section, and I will see you in the next one. Peace.